As the Bitcoin network grows and Bitcoin continues on its trajectory to become the reserve currency of the world, people are going to look for more and more ways to take their Bitcoin and put it to work. Because we focus on Bitcoin, we can put the time and resources into taking things to the next level that the Coinbases, the Krakens of the world, can't. If you look today at the New York Stock Exchange or the NASDAQ, or those companies actually don't make that much money. So I actually think Taro is very interesting because of the decentralized exchange it's going to facilitate. There's an aspect I think that a lot of people don't really realize is that reputation as a firm is actually going to be important in the Lightning Network. There is always risk, right? There's risk if you're not earning any interest. There's risk just having Bitcoin in custody, right? There's always risk. When I travel, when I talk to people, the people who really are the most excited are in developing countries. I think the Lightning Network is going to grow much more quickly in developing countries than in the developed world.
Alex Leishman is the founder and CEO of River, a platform for buying Bitcoin that also happens to be one of the biggest players on the Lightning Network. In our conversation, Alex explained why he decided to launch River back in 2019 with a Lightning Network integration. We discussed some of the new use cases that Taro could unlock on the Lightning Network, and we explored the risk-reward trade-offs for earning yield on Lightning versus other forms of yield. Alex has also asked me to forward his share of today's show splits to the Human Rights Foundation. So if you learned something new from this conversation, if you enjoy it, the best way you can support the show is by sending in sats over the Lightning Network. 50% will go to me and 50% to the Human Rights Foundation. I've also made one change to the lightning round at the end of every show. Instead of asking me questions, you guys can now ask future guests questions over the Lightning Network. So keep an eye out on my Twitter. I'm going to announce guests before they come onto the show. And in the day or so before the show films, I'm going to ask for you guys to send in questions. As a bonus, one of the questions that you guys choose to send in, I'll pick the best one and I will add it to the show splits of that episode, so you'll have a chance to earn sats as well. Just a quick shout out before we get into the episode. Today's show is sponsored by Voltage. Voltage is the industry standard and next generation provider for Lightning Network infrastructure. Today's show is also sponsored by Zebedee. That's Zebedee, and Zebedee is your portal into the world of Bitcoin gaming. We'll have more from Voltage and Zebedee later in the show. Alex, welcome to the show. I'm excited to chat with you about River and all the product you're building there. To start off, why don't we go back to your Bitcoin story and how you first learned about Bitcoin and why you decided to build River?
So my Bitcoin story starts actually quite a while ago when I was an undergrad in college. I was studying aerospace engineering, but I went down the economics rabbit hole and ended up reading this paper by Friedrich Hayek, who was an economist, called The Denationalization of Money. And it got me really questioning this idea of central banking and why the lifeblood of our economy is controlled by the government, effectively. And so I actually had this idea of creating my own currency that the government couldn't control. I wasn't smart enough to, figure out how to build Bitcoin. So I thought maybe I'd build my own commodity-backed money or something like that. And then in 2013, I came across the Bitcoin white paper and realized that it basically fulfilled the prophecy. It was neither government-controlled nor private. It was this completely new paradigm. And once I actually understood how it worked and was able to convince myself that this wasn't just some scam or sort of thing that was just going to break, I knew I had to work on it. So I moved to San Francisco at the end of 2013 to pursue a career as a Bitcoin engineer, and ended up becoming a software engineer and ended up going back to grad school. I was I was the TA for the first Bitcoin class at Stanford, along with a few others. And then made my way through the Silicon Valley ranks, I suppose, and started River 3 years ago.
And what was missing when you decided to start River? What were you thinking you were going to solve that wasn't being served by existing exchanges?
So the first wave, or you can say first, maybe second wave of companies like the Coinbases, that cohort of companies, Coinbase, Gemini, etc. They entered the market at an era where there was this proliferation of many different coins and lots of people wanting to trade all of them. So they took the path of least resistance and built exchanges to monetize the trading activity of all of these coins, sort of treating them all as equals: Bitcoin, Ethereum, Litecoin, etc. And that's been a good business for them. And it's been something that has made them lots of money. But I've always thought that that approach was going to get those companies stuck at a local maximum, and that the global maximum was building a company towards the vision that Bitcoin is on a trajectory to become the reserve currency of the world, and building the next generation bank to capitalize on that trend. If you look today at the New York Stock Exchange or the Nasdaq, or those companies actually don't make that much money.
Right.
And but JP Morgan or sort of these other firms are much bigger than that. Not only that, with Bitcoin, sort of money is being redefined. So banking, payments, and custody are all sort of in one. And the next generation of Bitcoin banks is going to be able to vertically integrate across all of those different business lines. So that's sort of the thinking behind River.
Right. So when you think about the comparison there between J.P. Morgan and the New York Stock Exchange, banking, payments, custody happening at J.P. Morgan, and the exchange functionality is just happening at the New York Stock Exchange. And so you think that is a reasonable assumption that in the Bitcoin world that is also going to play out, where that most of the value is going to accrue to those three functions of banking, payments, and custody, and not to the actual exchanging of assets?
Well, I think exchange will definitely be a very valuable business line for sure. But it's just one. It's the easiest thing to build, basically, right? What's not easy to build is the next generation of Bitcoin financial products that help people generate Bitcoin cash flows or put their Bitcoin capital to work, which is effectively what banks do, right? They help people put capital to work. And I'm not saying we're trying to build JP Morgan in the way JP Morgan runs things, right? Bitcoin creates a more honest system, and it's not going to look like the banking system today. But there's huge opportunities to build financial products around not just exchange, but mining around the Lightning Network, and other things down the road. As Bitcoin grows, as the Bitcoin network grows and Bitcoin continues on its trajectory to become the reserve currency of the world, people are going to look for more and more ways to take their Bitcoin and put it to work. Eventually, that will look like investing Bitcoin in more traditional investments like, businesses and equities and things like that, but we're not there yet. And so no one's really, pushed the boundary and pushing forward these types of financial products, and that's what we're trying to do.
Yeah. Do you think there comes a time where the exchange product becomes unnecessary? Where you no longer are earning from the exchange product, if we have this kind of hyper Bitcoinized world where if everything's Bitcoin, what are you exchanging to and from?
I think there's always going to be things to exchange to trade, right? Maybe today it's Bitcoin and dollars, but maybe it's Bitcoin and corn futures, right? Or Bitcoin and there's always going to be tradable things.
Got it.
So I don't think that's ever going away. Today, those tradable things, I think that set of tradable things that trade 24/7 in crypto exchanges is going to look different than it will in 20 years. But I think that trading is always going to be a business in and of itself. There's always going to be traders. There's always going to be that infrastructure. There's always going to be people making money there. But I don't think the average person is going to be using that stuff. Now, I think that the exchanges today really have two primary user bases, right? They have institutions, professional traders using their systems, and then they have people gambling effectively, right? the vast majority of their users are basically using it as a casino, right? 99% of Coinbase users probably should not be trading cryptocurrency, and I actually think like that's also not going away. Like people love to gamble, so I think what this has unlocked is actually just like easy access to like order book exchanges for retail, and should they be doing it? No, but like should people be betting on football? I mean, like who am I to say, right? It's like probably not, but like they will. So I don't think it's going away.
Right. Okay, that makes sense. So over time, people will always find something to exchange for. There's always going to be some kind of like, it may be different currencies, it may be maybe not fiat, maybe it's not altcoins, but there's going to be some exchange component in people's day-to-day lives, and maybe it's only a subset of people, right?
Yeah, and I think for the majority of people, it's going to be behind the scenes, right, for any financial product they use. Like, when you buy Apple shares through Robinhood or Charles Schwab, at some point there's an order hitting an exchange somewhere, but you're not using it.
Right. Now, I believe you guys integrated Lightning to River in, I want to say 2019 or maybe 2020.
We've had Lightning integrated into River since we launched in 2019. Yeah,
2019.
So we've had Lightning from the very beginning, and that's been something that's been very important to us. Part of the thesis behind River is because we focus on Bitcoin, we can put the time and resources into taking things to the next level that the Coinbases, the Krakens of the world, can't, because our engineering team is purely focused on building cool Bitcoin stuff.
Right. Now, was this decision to integrate it right from day one, was this out of like consumer demand? Was this something you thought that people really wanted then? Or was this just an idea that maybe in the future Lightning adoption ticks up and it becomes a really important thing and we'd like to get ahead of the curve?
It was getting ahead of the curve. It was, back then the Lightning Network was very small, and it was still very unreliable in many ways. And but we wanted to get smart about it, and the only way to get smart about it is to try it. And that's how you learn. That's how you get production experience. That's how you start to get the ideas for how do we take something like this to the next level. And so we're tech people at our core. I mean, I'm an engineer. We have an engineering culture. We want to try new things, and that was just something we wanted to do.
Right. So now, when I think about Lightning users today, I try and group them into different buckets. We have maybe typical consumers who are trying out different apps. We have traders who want the instant settlement. We have hobbyists maybe running their own nodes, and we have merchants that are maybe making sales over Lightning. Do you have a sense for what that breakdown of Lightning users at River is?
So, we see a few different types of Lightning users. Some people are just sort of playing around with it. Like, if you think about it, like, let's say you just want to like test a Lightning invoice or something like that. The easiest thing is just to like buy a little bit of Bitcoin on River, and you don't have to set up any like non-custodial infrastructure, wallets, etc. So we get a lot of people just like testing Lightning stuff. Then we also see people self-custodying. So they'll buy from River, then they'll move to their sort of self-custody Lightning wallet, and then which is kind of nice for them, because actually if they have a channel with us, right, they can pay back through us because we're very well connected,
right,
and which is kind of interesting. Now, we don't take small channels, so those people tend to be like larger sort of hobbyist node operators. And it's not that we'll never take small channels in the future. It's more like there are sort of scaling limitations with the amount of channels you have, and we want to make sure our channels are high quality. And then we also see actually swap behavior. So one of the sort of not like obvious things is, because you can withdraw on Lightning and on chain from your River account, you can swap in and out on River, on chain and off chain. So let's say somebody has a bunch of Bitcoin in their Lightning node and they want to just get it on chain. Well, sometimes they'll just deposit it to River and then just like withdraw on chain, and vice versa. So that's something we actually didn't anticipate, but it's been interesting to see.
So effectively using it as like a replacement to Lightning Loop or something like that.
Yeah, yeah, and it's not like we built the product to do this. It just sort of implicitly accomplishes this, because one of the things we wanted to make sure of early on is when you withdraw Bitcoin from a River account, it's not like there's Lightning Bitcoin and on-chain Bitcoin. Like, you have a Bitcoin balance at River, and you can withdraw it two ways or deposit it two ways, and it just credits and debits your Bitcoin balance. When we first launched, I think a lot of people assumed we would have like Lightning Bitcoin and Bitcoin, but that's not how we do things.
Yeah. Do you think there will be a time where anyone can send any amount and you guys automatically suggest which avenue that Bitcoin should flow through? Should it go on Lightning? Should it go on chain? Depending on fees and a user's need for like time constraints.
I think it's a cool idea. I think there's a lot of practical challenges there, because the assumption there is they have control over the recipient.
Right.
So, like, they have to tell us, like if there is, like, they would have to give us information about the recipient, right? It's not like every recipient has this default standard where they accept Lightning or on-chain payments. So it would be kind of a tough thing to accomplish.
Yeah.
So I don't like, it'd be cool, but I don't really know actually how it would work.
Right. Yeah. You'd have to have, I guess, everyone would have to be able to accept both Lightning and Bitcoin. It would be a logistical challenge for sure.
Like one possibility is, there's like a new combined sort of like QR encoding, where a recipient can would put both a Bitcoin address and a Lightning invoice,
Yeah.
and then it gives us the sort of discretion to pay one way or another.
Yeah, that's the Bitcoin QR code, right? I think Cash App or someone was mentioning.
Yeah, I think Cash has actually done that recently.
Yeah.
Yeah.
Now, in the spirit of getting ahead of the curve, and you've done this with Lightning for the last 3-4 years, you've been building on it. What are you most excited about for the next 3 or 4 years? What are you trying to get ahead of now in this like Bitcoin adoption curve?
Yeah, so I'm excited about a few trends. One is just the increasing robustness and growth of the Lightning Network itself. I think a lot of people have a hard time reasoning about sort of the growth of networks and how fast that can happen. And if the Lightning Network continues on its trajectory, like, this exponential growth is going to make it orders of magnitude, bigger than it is today over the coming years, which means, millions and millions and millions of more people are going to be using this. So just the scale that it's going to get to is just very interesting and very fascinating, especially with a lot of large onboarding platforms to Bitcoin starting to integrate the Lightning Network. I'm also very excited about Taro, or Taro. I think it's officially pronounced Taro, from what I've heard. I've been corrected. But I'm very excited actually about the assets on Lightning. I think that it's going to open up this whole new world of types of financial products that can be built. I think also Lightning is sort of at the forefront of what I call small footprint, like decentralized finance on Bitcoin. And what I mean by small footprint is, building financial products that only commit small amounts of information on chain, which is effectively what a Lightning channel does, right? In contrast to these smart contract blockchains like Ethereum, Solana, etc., where they have this shared global state that's replicated worldwide, and all nodes run all computations and see all data. It's not private, it's not scalable, but it is easier. It's an easier programming model, right? With Lightning, though, it's done the hard work of building this, the first sort of layer of this off-chain financial world. And as it matures and as we get smarter about things, I think we'll see more than just payments being able to more financial products than just payments happening on Lightning and then layers above Lightning.
And so when you think about having a small footprint on chain, is the benefit of that just the privacy component, or is there another benefit that you see?
There's a lot of benefits, and there's some downsides. One benefit is privacy, absolutely. The only people who know about the state are the people who need to know about the state. The parties involved in the payment, in the example of the Lightning Network. That also makes it a lot more anti-fragile, right? If there's some hiccup or some bad actor in that payment flow, it doesn't affect anybody else. If there's some catastrophic failure, some technical failure on one of the nodes involved in one payment channel, not fun for them, but everyone else is still fine, right? Whereas in contrast, right, if there's a flaw in the EVM, good luck, right? That's going to be an absolute nightmare to clean up because everyone's affected. So it keeps the sort of types of catastrophic failure that can happen much more contained. So those are, I think, two of the, and it's also way more scalable, right? You can basically scale infinitely. Some of the downsides though are, because it's so private and because you don't have this global data set that everyone can see and agree on, building more complex financial products is more challenging, right? One big problem is like the matching problem, or the order book problem. Like, let's say you want to exchange, like in Ethereum, right? You have like Uniswap, right? Where you have these. It's easy to build like an on-chain exchange to swap assets. In Bitcoin land, if you want to do something like this, you need people to like agree on off-chain transactions. You need to like collect orders, and then like if you match an order, that both parties then need to sign that order before it could ever get actually like posted. So then you get all these challenges with, okay, so then everyone like you need to like you can't have like all this like aggregated liquidity just like ready to go, ready to fill an order. You have to sort of do each order one by one in an interactive format. And so it just opens up the door to like a lot of more complexity and challenges there, but I think they're solvable.
So do you think there's a time where we do have some similar exchange order book system built on either Bitcoin or on Lightning? Maybe this is something that leverages Taro?
So I actually think Taro is very interesting because of the decentralized exchange it's going to facilitate. There's a number of ways that exchange can be accomplished in a Taro world. So I think there's like a big debate. I think the biggest debate would be decentralized exchange for like altcoins and stuff on Bitcoin. Like, let's not even talk about that. Like, I think there's one trading pair everyone can agree is useful, which is dollars and Bitcoin, right? So let's say there's a stable coin on Taro, right? And for those the listeners who don't know what Taro is, it's basically this way to represent off-chain or just tokens, arbitrary assets on Bitcoin, on the Bitcoin blockchain using Taproot outputs that are also transferable off-chain on Lightning, right? So the way this would work is, let's say I wanted to create a dollar coin, right? I could create like, say, River dollars, right? And we have a bank account. If you give us dollars, we give you a River dollar on chain. And then if you have River dollar channels, you can transfer these dollars to anyone else. To anyone you can find a path to. What's cool is that not only can you transfer these dollars on Lightning, you can atomically swap the dollars for Bitcoin on Lightning with other parties, and vice versa, which means you can trade Bitcoin and dollars now through Lightning. And so those trades can be facilitated through routing nodes that there's a few different modes of operation you can do to like facilitate this decentralized exchange, but sort of the long and the short of it is, all of a sudden now you can have a DEX running off-chain, which is kind of cool.
And powered by Bitcoin liquidity.
And powered by
Bitcoin
Bitcoin. You could even theoretically this decentralized exchange can also be like implicit. It can be part of a routing, just part of a payment flow. So let's say, for example, that a merchant wants dollars, right? Which is very reasonable. Most of their costs are still in dollars, so a lot of merchants still want dollars. But if they want to accept Bitcoin, they could actually accept the dollar payment over Lightning. Let's say, Kevin, you have a Bitcoin channel with River, and River has a dollar channel with a merchant. You want to buy something from the merchant in Bitcoin. The merchant wants to receive dollars. So you pay through us. We have a price that we convert at, and we route your payment initially from you to us comes via Bitcoin, and then from us to the merchant goes via US or like River dollars or something like that. And we've facilitated that trade.
Yeah.
And there's a lot of interesting stuff like that could happen.
Yeah, that was something I was thinking about here before this conversation. It was like, you guys are an exchange, and Taro enables you to exchange any asset. And you have one of the biggest nodes on the Lightning Network. I'm piecing two and two together here. Does it seem like, is it a reasonable assumption to think that River is going to be facilitating a lot of these asset swaps and asset transactions on Lightning through Taro?
So, these are all things that we're exploring, right? We don't know exactly how things will play out. There's a lot of different ways to approach this, to approach all of this stuff. While I won't give away sort of our specific plans, we are very, very interested in this direction. We're very interested in seeing the Lightning Network grow, flourish, and prosper, and using our position as a depository institution to facilitate the liquidity for payments like this. So the short answer is yes. The long answer is that's more of a direction, but there's still a lot of figuring out. The devil's in the details with this stuff, right?
Right.
For example, how do you know what price we're going to convert at, right? Like, is everyone agreeing on that price? How do you guys make sure we're not scamming you? There's a lot of protocol details left to figure out there. And so I don't want to sort of hand wave away some of the complexity with this stuff, because I think as it gets built out, we'll start to learn a lot more about sort of some of the warts and some of the things that will take time. So we're being sort of modest and taking an engineering approach to this, and really making sure we deeply understand sort of the ins and outs of it before committing to a product.
Do you see any regulatory challenges with people issuing assets on Bitcoin that are then tradable on Lightning?
There's always going to be regulatory challenges with this stuff. I think the regulatory challenges are going to be similar to wrapping assets on Ethereum or Solana, right? One way to look at it is kind of look at USDC, look at wrap Bitcoin. What are some of the compliance things that they face? How does that apply to a Taro world? I think the answer is still a little sort of murky. I think a lot of people don't understand this. Regulators, if you mention Taro and DC, they have no idea. They don't even know, right?
Yeah.
They don't even know. So no one else knows either.
Right.
What the so everyone's going to basically take the best effort, right? And sort of anything that gets built is going to there's no law on the books about how to deal with a Taro asset.
Right.
So everyone's going to take sort of what they think is a reasonable approach that sort of in the spirit of the regulations, and isn't facilitating criminal behavior that the U.S. government doesn't want to facilitate, right?
Yeah. I guess where I was heading with that one was kind of thinking about, what if the assets being issued on Taro are not just dollars? What if they're stocks? What if they're then all of a sudden we have, I guess, clear frameworks for how to issue stock in North America, but I guess it's a different way it's a different mechanism for issuing stocks now. Now it's a lot easier to do than going through some regulated entity.
Well, Yes and no. So I mean, the same thing applies to ERC20 tokens on Ethereum. The 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 burden will be on the issuer, right? And at the end of the day, an equity is a government construct to begin with, right? Like rights to a company, which is created by a government, right? Like governments like have invented the concept of a company, right? And then being able to like give people rights to like a fraction of that company, and legally enforcing those rights, it's all a government construct, right? So it's actually not like a technical or like on-chain challenge. It's actually more like a real world question.
Yeah, of what's going to fly and what's not, and what
Yeah.
governments are going to do in response.
Yeah.
Okay, I want to go back to your discussion about your routing node on the Lightning Network today. So right now, I believe you have the fourth largest node on the network. I've been tracking the numbers of the public capacity numbers for a little while, and in the last about 50 days, you've added about 50 Bitcoin to your node of public capacity. What signals are you seeing right now that tell you it's a good idea to add all this Bitcoin and to continue adding over time? Because right now, I think your total public capacity is about 150 Bitcoin. So you've added about 33% of that in the last 50 days or so. So what signals or trends are you noticing that compel you to continue adding to your node?
Yep. So I think it is important to sort of understand what this number actually means.
Yep.
So this number is basically the capacity of the channels that River has open, right? What's not actually always visible to the network is what side of the channels is that capacity on, right? So this doesn't mean that we have 150 Bitcoin on our side of all of these channels, and if our node got hacked, 150 Bitcoin would be stolen, right?
Right.
It's the sum of the total capacity of every channel we have. So, basically a lot of this. So some of it is River, River demand, River clients depositing and withdrawing. Every time someone deposits to us, that signals to our peers to open more channels with us. And we're also sort of routing for some, big players that are moving funds on and off of other big exchanges, bigger than River, right? And so, you have like Bitfinex, Kraken, and all these guys, and so they have big channels with us, and because we're very well connected, they're routing a lot of things through us, and basically just by positioning having like a high quality node that's very well connected, and also there's an aspect I think that a lot of people don't really realize is that like reputation as a firm is actually going to like be important in the Lightning Network, right? Especially if you're connecting to other big players. So we're a desirable peer for other big institutions because on the off chance that there is a something happens with the channel, right? Like let's say there's some technical glitch and we're able to like sweep we like do a justice sort of transaction to sweep the funds. They know like we'll make them whole, right?
Right.
There's actually like there's more real world sort of dynamics than you might initially think, and so for that's sort of like a long-winded answer, but there's a lot of reasons that like we have a lot of big channels, and that's a few of them.
I guess one of my assumptions there was that the channels that you have are going to be roughly balanced, that your public capacity is going to be roughly 2 times what the funds that you have on your side versus with all your peers. Is that a realistic assumption to make for exchanges? That is it ideal to have your channels perfectly balanced? Is there a mix that you prefer, that's not 50-50?
I think so. The way we run things, I don't know what the current state today is, but we basically keep an eye on the channels we care about, and when they do get low or imbalanced on one side or another, we'll take actions to rectify that, right? So if we know, for example, that Bitfinex is a very popular destination, right, and that channel with Bitfinex starts getting low, we have an alert that'll open a new one, stuff like that.
I hope you're enjoying the show so far. I just want to give a quick shout out to our sponsor, Voltage. Voltage is the industry standard for Lightning Network infrastructure. Creating layer 2 applications and services on top of Bitcoin starts with Voltage, where you can spin up nodes, get access to liquidity, optimize your node, and much more. Voltage is leading the way as the next generation provider of Lightning Network infrastructure. And if you want to get a free trial and start using Voltage today, you can do so at voltage.cloud. In this process of the last 3 years of building on the Lightning Network and running this node, what are some of the big lessons you've learned about how to operate a successful routing node?
Yeah, so I think some people don't realize we actually don't only run one node. We have one like public node. We actually have an interesting architecture where, and we constantly like evaluate if we want to keep it like this, but for the time being we actually have we generate the invoices on a internal node, and then we have this hub like routing node that's like public. So we're actually running kind of a fleet of nodes, and everyone I think every year is getting smarter and smarter about the patterns, and like how to actually accomplish this, and we we've been building out and investing in the infrastructure, especially in the last year, to really make sure that we can scale up the traffic, right? Like the databases are getting bigger, a lot more payments are starting to be routed through. LND is doing a good job keeping up, but also, there's only so much that one team can accomplish. And, a few of the things that, we do to keep our node high quality is alerting and monitoring, making sure that if your goal is to actually run a high quality node, running, having good alerting and monitoring to be able to act quickly when something is going wrong is important, and ideally before something goes wrong. So, if you want to optimize your fees, right, you want to make sure that the channels that most of your payments are coming through always have sufficient liquidity. So don't alert when it's 0, alert when it's like at 20% or something like that, right?
Right.
Also, just knowing your peers. Like, I think some people don't think about this, but just like the Lightning Network is actually still human. It's computers talking to each other, but there's humans running those computers. And have conversations with the node operators you connect to, right? It can actually, sometimes it's very helpful, right? Sometimes someone makes an infrastructure upgrade and their IP address changes, and like you stop routing traffic to them, and like things are failing. Being able to like text them or message them and be like, hey, like is something happening? It can actually be very valuable. So those are maybe two non-obvious things. And maybe the monitoring is obvious, but I think that other one is a bit non-obvious.
Yeah. That's interesting that you also have a fleet of nodes and that some are the internal, like private nodes. Do you have a sense for, we look at this public capacity number, this whatever, 3,900 Bitcoin, and I think a lot of people gravitate to that and say, that is the Lightning metric, and if that's not going up, then Lightning adoption isn't going up. And I think there's a lot of, it's a flawed metric in a few ways. But I would love to understand what you think about the private side of things. Do you have a sense for how big the private capacity of the Lightning Network might be? Is it roughly the same size?
I actually don't. Now I do know that a lot of the, I do think a lot of the like, what's the right word? The sort of mobile nodes have private channels with their like routing hubs, from what I've heard. Just talking to people who even know more about the Lightning Network than I do, I do know there are a lot of private channels. I don't know how much they are. I mean, I can give some color into our private channels. I think it's actually correct to exclude our private channels from network capacity, because effectively our private channels are channels with ourselves. And it's not because of, and it's just because of the nature of the software, right? There's actually, like, if you're generating a lot of invoices, it can actually slow down your routing. So we actually like generate invoices on a node different than the main hub node, just because it's not like there's some physics limitation here, or some fundamental limitation. It's just more like the nature of the architecture of the software as it is today. Like, it makes it advantageous to generate the invoices on a different node. In an ideal world, you'd have like this super robust Lightning infrastructure with one public key, and the private key to that is like super safe in some HSM with like tons of security measures, and you can generate infinite invoices and route infinite payments, and it just works. And you have a bunch of redundancy, without worrying about race conditions and state being shared across multiple machines. But we're just not there yet, right?
Yeah.
So at the time being, we're just running a bunch of different L&D nodes.
Are there any specific tools that you would that would improve or like make your life easier as a node operator? Like, I'm thinking like either capital management tools or automation tools or accounting tools. What's your sense for like what would improve your ability to route payments?
Yeah, so there's all sorts of tooling that would be amazing. We're building some stuff ourselves, just like the tooling, kind of proprietary tooling to automate some of the manual tasks that we're regularly dealing with. It's interesting. Like, L&D is an amazing piece of software, but that team is very talented and investing very heavily in making this scalable and work for enterprises. Lightning is interesting because it actually has like three very different user bases. There's like the hobbyists who run just one node on the server and it works, right? And they're not putting tons of money on it. They don't need tons of redundancy and failovers and resiliency. Then there's like enterprises who need redundancy, who need backups, who need disaster recovery, who need very secure key management, who need accounting, auditing, access control. And the infrastructure and architecture of those systems is going to be very, very different than the hobbyist. And right now, everyone's running the same software. And so it's going to be interesting to see sort of how this diverges over time. And I don't know how it will yet, because there's this sort of counter argument to that, which is that everyone runs Bitcoin Core, whether you're an enterprise or a hobbyist, because that's just like the cost of creating a different implementation that can keep up is too high.
Right.
And we're potentially already seeing this. Taro, for example, right? Like, okay, if you're running an alternate Lightning node and doesn't have Taro support, like, are you is that going to just really like hinder your ability to earn more routing fees, right? Or what's the implication? Like, I don't know.
Yeah. Huh. That is an interesting one. I haven't thought about the people who decide not to run Taro. Do they actually lose out? Is their routing ability impaired in any way? I also want to ask about the fact that you guys have one of the largest nodes on the network. Is there a specific reason you want? Is this like a specific goal to be one of the largest, or are you just kind of matching demand as it comes in? And is there any benefit to being the largest routing node versus the second or the third?
Yeah, we're actually not trying. Our goals internally aren't are more like be useful, right?
Right.
So just like we don't just like blindly throw Bitcoin on there just to make number go up.
Yeah.
That's not what's happening. We actually were surprised. Like, we just like checked one day, like, whoa, we're like 4, like, wow. We didn't realize it.
Yeah.
I think we first noticed when we were like 5, and then we went up to 4, and we're still quite a ways. Like, there's many ways to measure it, because like Bitfinex the 2 of their nodes are top 4, right?
Yeah.
So they're like the big daddy, which makes sense. They're such a big exchange. So no, like that number I'd love to be number 1, but it's not something we're just gonna like put a bunch of Bitcoin in a channel just to make it happen.
Yeah, so it's more like you're matching customer demand, and as customers demand more, you have to supply more.
And remember, customer isn't just a River.com customer. There is that aspect of it, but it's also our customers are our peers.
Yeah, exactly. So any activity on the Lightning Network could require you to add more Bitcoin.
Yeah, exactly.
Now I want to get into the topic of earning yield and Bitcoin as a productive asset. Because I think this is a real possibility on Lightning now, and I think a lot of people have not kind of clued in that there's, a way to earn yield by supporting the Lightning Network, having full custody of your funds, not going through a KYC process. Now, as an exchange, and as an exchange with a very large routing node, do you see a future where you can let customers, say, deposit Bitcoin, lock it up with you, and deploy that Bitcoin on your routing node and earn yield for a customer?
It's definitely something that's interesting. There's a lot to learn about where are the revenues, like optimizing revenue on the Lightning Network. That's still something that we're getting smart about. Is, because there's actually two revenue streams and potentially more with Taro. One is routing fees. And so actually until recently, we basically didn't spend any time optimizing routing fees. It's just something we just wanted to it wasn't something that was worth optimizing. We're getting smarter about that. And there's a lot, we still take a relatively simple approach, and there's a lot of sophistication that, this could get very sophisticated very quickly, right? And there's also liquidity selling, right?
Yes.
I think it's still the jury's still out. Like, how big of a market is it going to be for people buying inbound liquidity from well-connected nodes like ourselves? Also something we're still working on figuring out. So the shorter answer is we're looking at it. It's something we're very interested in. It's very compelling because it's fully custodial, right? It allows people to earn Bitcoin without sending that Bitcoin to Genesis to lend out to hedge funds that are putting it in DeFi, right? It's like there's a very clear understanding of what's being done with the coins and who has control of them. There is always risk, right? There's risk if you're not earning any interest. There's risk just having Bitcoin in custody, right? There's always risk. But the risk is understandable. The risk is that, the Lightning node gets compromised and someone's able to steal the funds. And so to scale that up, you need to scale up the security and be really smart about, running that infrastructure.
Right. When you think about those two revenue sources for a routing node today, so earning on routing fees and then earning on channel open fees, what do you think that mix is today for a well-established routing node? Is it more than 50% of fees coming from routing, more from channel opens?
Right now, I think it's still mostly routing. I think the channel market is very early days still, and there are definitely people making money on that. But I think it's still, I think routing fees is still the way people are mostly monetizing, but that might change over the next year.
Yeah, I had an interesting conversation with Rene Picard the other day, and he suggested that maybe the game theory hasn't quite played out yet, and that routing nodes could eventually lower fees to zero on routing because the actual act of routing it's a costless thing to actually route a payment, and instead make their money on channel open. And that would effectively give people, it means the routing node now doesn't have to take the risk of having payments come through them. They can just earn right away, and consumers could basically then route for free across the network. What do you think of that take?
I think it's definitely possible. There's also I think the inverse is also possible, which is that merchants, for example, who want an inbound channel or somebody who want an inbound channel, they don't actually want to pay up front for it. They would rather it be paid on demand as used, and they'd rather offload that to the customer. And so that's because if you think about it, right, now there's all sorts of people who might buy inbound channels, but the merchant example, right, let's say you're running a store and you think you're going to do $1 million in sales this month. So you open a month-long $1 million inbound channel, but you have to pay for that today. You haven't got the cash. You haven't earned the cash from those sales yet. So you're fronting cash to potentially be paid, right? Which is an odd user experience for the merchant.
Yes.
And so there's still some open questions about, I think, how this is going to play out and what the market's really going to want.
However, that is very similar to what a merchant does today, right? They are eating the cost of the processing fee today, and they may have some fixed cost associated with their point of sale terminals, and they're just like, hey, we'll give it to you for free, customer. Come to us, buy with us. You won't see any of the fee. We'll take it all.
They have a fixed cost with their point of sale terminal, but it's fixed, and it's like they're not having to predict how much they'll. Now, I agree. Maybe this is just solved with smaller channels, and so they just buy a $10,000 channel, and then they just keep buying new ones as there's some amount they're willing to front.
Right, on an as-needed basis almost.
Right.
Interesting. Okay, I want to talk about kind of the yield opportunity on Lightning. Basically, I was looking at some comparables in the kind of DeFi world, or how do you earn yield on Bitcoin today? And I figured, if you deposit 1 Bitcoin on BlockFi, they have a tiered structure, you earn 0.615% today, annually. I checked on Compound for wrapped Bitcoin. You're earning about 0.07% today. Do you think it's realistic to expect a world where Lightning routing yield is higher than those?
I think it's possible, but I don't feel confident enough in the numbers to know for sure that it's going to be higher. The fundamental constraint today that's hindering interest rates on BlockFi and Compound, etc., isn't going away, and that's just the size of the demand just isn't there, right? If only 100 Bitcoin were available on the whole market to be lent out, the rates would be much higher. It's that everyone with Bitcoin is looking for some yield, right?
Right.
And there's so much Bitcoin out there, and there isn't that much of a reason to borrow it. There's just way more Bitcoin to lend than there's demand. So Lightning faces a similar issue. The size of the Lightning network today is still tiny. It's a rounding error compared to all the Bitcoin out there that would want to be put to work, right? And so, it's going to have to get much bigger. Right now, there's sort of this thing, I haven't really thought this through. It just sort of struck me, but when the Lightning network is small, I wonder if the yields get bigger, the bigger the Lightning network gets. Because today the Lightning network is so small, there's so much Bitcoin that can be put there. But as the size of the Lightning network increases compared to the amount of Bitcoin available to be lent, maybe prices change. I don't know.
Right.
I don't know how it plays out.
Interesting. Do you think that we see a flow of Bitcoin from some of these custodial lending products or the wrapped products on other chains back to Lightning when yields begin to rise on Lightning and get to a point, maybe they get to 1 or 2%, and all of a sudden people are like, whoa, we can actually earn money? Does that then incentivize a flood of Bitcoin back to Lightning and away from those custodial products?
Yes. I think, it depends on what the numbers are, right? Right now, people earn yields on Bitcoin in a number of different ways. There's people lending to traders who are market making or short selling. There's people lending to miners. There's people doing the GBTC discount trade. There's people doing futures trades. There's people just doing sophisticated stuff in DeFi, yield farming and things like that. And then the question is will Lightning be this other sort of thing that sort of plugs into the yield generation? A lot of the way the yield generation works today is the BlockFis of the world and Genesis is they take the Bitcoin and then they put it to work across a lot of all these different things, right? So what we would see is basically Lightning adding to that, right? One more way to put it to work and bubble up to these aggregated yield apps,
Right.
that just say, they don't tell you what they're doing with the Bitcoin. They're just saying, here's the rate we're going to give you. And then they figure out how to allocate it behind the scenes.
Right. Okay. So they could be running Lightning nodes themselves. They could be earning yield and then passing on a fraction of that to the consumer.
Yeah, what you already see is specializations, right? So you get like the high level sort of aggregator company like a Genesis, and then you get the fund that's really good at DeFi or the fund that's really good at Lightning, right? That, and then it just kind of bubbles up.
Right. Now, for a consumer, how big do you think the risk difference is between using some custodial lending product and trying to generate yield on Lightning through running their own node? Like, is this like an order of magnitude difference in risk? How do you quantify that?
It's really difficult, and I think it's sort of, I don't know if it's even worthwhile. Really, what it comes down to is, I mean, there's a few ways to look at it, right? Like, how low does your risk have to be to risk a asset that on average increases in value 100% annualized, right? Like, and what yield do you have to be getting, right? Like, is it worth risking that at all for like 2%, right?
Yeah.
Or is that like silly? And this the decision is a decision different for everybody, right? If it comes to running your, like, for me, like I would definitely risk some of my Bitcoin putting it to work on the Lightning Network because I know what I'm doing, right? Would I trust River to do it for me? Yes, because I trust my company and I know what we're doing.
Yeah.
But if would I recommend that like a noob to Bitcoin risks all their Bitcoin on their own Lightning node and they're not super technical? No.
Yeah.
I say like get smart about it. Put someone there, and then figure it out if you want to keep going.
Right. Is there when you're thinking about operations at River today, is there a constraint on like how much capital you're willing to put on a hot Lightning wallet?
Absolutely. Yeah. No, we keep the vast majority of Bitcoin in multi-sig, totally offline cold storage. And anything hot is like sort of considered, at risk in some way, shape, or form. We've never lost funds ever, whether in a hot wallet or otherwise. We work very hard to make sure it stays that way. But it's all about, there's no such thing as zero risk, and we're viscerally aware of that. But the good news is, as the Lightning Network implementations get more and more robust, as we build out our own infrastructure for securing key material and detecting suspicious activity, we feel more and more comfortable putting more and more Bitcoin on the node. So it will just take time.
Right. Yeah, I guess, is there a point at which, if the network grows really quickly and if the price of Bitcoin goes up really quickly, do you think there's going to be a point where some participants just go, whoa, I can't keep up. Like, I'm not willing to put any more funds into a hot wallet. Do you think that's a realistic outcome?
I think what's going to happen is that if there is yield to be had, people will earmark deposits explicitly for that, acknowledging that there's risk. That's the ethical way to do this. The ethical way to do this is to, once you start getting like larger and larger, and you're like, okay, this is actually like material, then, or it's like more than we could cover ourselves as a company if we lost this. Like, that's when you have to start asking the question, okay, like, do we ask clients explicitly to take a risk with the Bitcoin in return for yield, right? And that's the right way to do it, in my opinion.
Right. Now, okay, let's talk a bit more about the growth of the Lightning Network, and if we see this kind of like, because you had written a tweet about how this growth is not going to be linear. This is going to be there's an exponential curve here. What do you think some of the catalysts are for? We've talked about Taro, but are there any other catalysts that you see as potentially leading to another big flood of liquidity added to Lightning?
Yeah, I think Taro's actually the biggest.
Really?
But I think that we are going to see more and more and I think this isn't going to be like over the coming months. I think it's going to be over the coming years. I think we're still going to see continued international adoption of Bitcoin. I think the Lightning Network is going to stay relatively small in the U.S. For quite some time. When I travel, when I talk to people, the people who really are the most excited are in developing countries. I think the Lightning Network is going to grow much more quickly in developing countries than in the developed world. And so I think as that trend continues to play out, that's going to be a catalyst for its growth.
How much money do you think will flow in with the creation of Taro? Like what kind of scale are you thinking about here? Because we got stablecoins, which we know are like a $100+ billion market today on other chains. Like, how do you wrap your head around what that magnitude of growth could look like?
I don't know the answer. The good news is it's going to be measurable, because whoever's providing like the dollar assets on Taro will probably report how much there is, right? And so we will see these numbers of like how much dollars are flowing into the Lightning Network. Then as dollars flow into the Lightning Network, it creates more demand for the Lightning Network. Some of that demand will also be using Bitcoin on the Lightning Network. And I to be honest, I don't want to pretend to know exactly how this plays out. My gut just tells me it's going to get very interesting.
Interesting. Okay. So we've wrapped up a bunch of the questions that I wanted to get to. I want to transition to another segment called the lightning round. Are you ready for some rapid fire questions?
Let's do it.
Welcome to the lightning round presented by Zebedee, your portal into the world of Bitcoin gaming. The Zebedee app offers a full-featured Lightning wallet seamlessly integrated with your own personal gamer tag so that you can earn Bitcoin on all of Zebedee's games on mobile and desktop. It's never been more fun to earn Bitcoin, and Zebedee is your key to it all. To claim your personal gamer tag and start earning some Bitcoin of your own, download the Zebedee app today. Okay. Are there any books that have meaningfully changed your view of the world?
Yes. There's a few. The Sovereign Individual was definitely one. Not a book, but a paper, The Denationalization of Money. A book I read very recently, The Moral Case for Fossil Fuels, was very interesting. Anything else? I think those are probably my top three at the moment.
Cool. I like the book choices there. If you could change one thing about Bitcoin, what would it be?
It's a good question. I would probably clean up the scripting language. I think there's a lot of just like random crap in there that no one really uses. And it just sort of like a lot of technical debt. That's probably one of them. I do think there's a challenge coming up. Like I do think the question of like, how does block space get paid for? Like, how do we drive demand for it is a good question to be asking and answering. And I don't know that's anything to change with Bitcoin so much as there's things that need to be built to create more demand for block space.
So that's actually another question for you. How much will it cost to make an on-chain transaction in the year 2030?
I think that I hope it's yeah, that's a good question. I'd have to do the math about like what's sustainable, but I guess it's in like the tens of sats per V-byte is sort of like what I would hope.
And would that be then as a proportion of, I think right now we're at like 1% of the block subsidy is covered by transaction fees, 1 to 3, 4, 5% depending on the time of year. Would that be kind of like a step up to maybe 5 to 10%?
Yeah, it would be a relatively order of magnitude increase. Seeing 10 to 20% would be nice. Seeing a clean trajectory to basically offsetting the halving would be nice.
Yeah. Okay. What do you think, if you had to guess right now today, what is the average yield being earned by Lightning routing nodes today?
I would
Let's
guess
just
like
the
I
constraint to
would
public
guess
capacity.
the average is around 1% or sub 1%.
Interesting. Okay, one final question. If you could only store your wealth in one asset for the next decade and it could not be Bitcoin, what asset would you pick?
Um, that would probably either be real estate and Apple shares.
I like it. Okay, I really enjoyed this conversation. This is awesome, and I'm glad we got to dive really deep into the Lightning Network. Where can people go to learn more about you and the work you're doing?
River.com. It's very easy.
Awesome.
We also have
Thank
a
you for
lot of
taking
great
the time.
educational material on River Learn about the Lightning Network and all sorts of advanced Bitcoin topics.
Love it. Thank you for taking the time, and I hope we can do this again sometime soon.
Thank you, Kevin.
I hope you guys like the new format for the lightning round. This is going to be really cool. Once everyone is participating and engaging and asking questions to guests, we're going to have hosts, guests, and listeners all earning sats in this value for value flywheel. I think it's going to be a really cool idea. There weren't any listener questions for this first episode. That's why all the questions were asked by me. But in future versions, future guests, every time they come on, I'm going to announce on Twitter before we film, and I'm going to ask you guys for questions. So you guys can send in questions as a boost on Fountain like you normally would. You can send a boost to the show or a particular episode. Doesn't matter, I'll be able to read them all. And I will be able to then ask those questions to guests. And anyone who sends in a great question, I'm going to add one listener to the show splits of each show once the show goes live. So it's going to be really cool. I want to make sure I get to a couple of the comments and questions sent in last week. Real quick, let's run through the top 5 supporters. We had Mallard Quackenbush sent in 3,234 sats this week. An anonymous user on Castamatic sent in 3,070 sats. Peter sent in 1,878 sats. J24 sent in 887. Turla sent in 539. And we got a bunch of new comments. First one is from Peter in response to episode 49 with Paul Etoy. It says, wow, this interview blew my mind on what's possible using Lightning and international micro task work. Very cool. Peter, every single time I have a conversation with Paul, I leave feeling the exact same way. He's operating on a whole new wavelength, and it's really cool to see some of this innovation happening on Lightning. Incredible stuff he's working on. Dr. Barfalo says, loved the show, working in data science. This episode was incredible. Again, on episode 49 with Paul Etoy. Thank you. And thank you for the 123 sats as well. We have Stephen Gornick, who says, if the Stackwork task worker is anonymous, how can Stackwork claim that workers are working a max of 2 hours a day? Can't a worker have multiple accounts? I'm not sure about this one. I may have to ask Paul for specifics on it. But one thing Stackwork is doing is also providing people with phones. So in some of the regions that they operate, they're actually going to be giving people phones to perform tasks. As they perform tasks, they can pay off the phone, the cost of the phone, and then at the end they're left with a phone. They have a free phone. So in that case, it's quite easy because, obviously if someone doesn't have a phone and Stackwork gives them a phone, that person has one phone now and they have one account. But I'm not sure in other cases. I have to dig into that a little bit more. Great question. Mallard Quackenbush says, really interesting discussion. Haven't even heard of the concept of a knowledge graph before. Again, in episode 49, sent in 2,450 sats. Thank you, Mallard Quackenbush. I recommend listening through that episode twice. Paul's just, again, he's operating on a whole new wavelength. He's introducing a lot of new concepts. And I think it's worth it to kind of really understand and wrap your head around them, because I think they'll be around for a while. J24 says, those who got a spark for self-hosting, check out the self-hosted podcast by Jupiter. They are also value for value enabled through podcasting 2.0. This was in response to episode 37 with Mempool. Thank you, J24. I will check that podcast out. And thank you for everyone sending in comments. Looking forward to seeing what you guys send in before the next episode goes out. As a hint, I believe I will be interviewing Roy at Breeze for my next episode. So get ready with some questions. You'll see it on Twitter. Once you see my announcement, you can then send in comments and I may add your comment to the show split and I will ask them live for Roy at Breeze. Talk to you guys soon.